Hi traders, this is Cynthia of Day Trade Forex bringing you a short introductory video to the currency strength meter template. And in this video I'm going to explain the reasons why we want to learn how to use a currency strength meter, and I'm going to show you how to use it in hopefully a very simple way. It might seem a little odd at first, but there could be no better way for you to learn how to trade currencies than to learn how to use a currency strength meter. And the reason is that most traders do not know how to pick and choose a currency pair to trade when they sit down and they're ready to start their trading session. And it's difficult and time consuming because we have 28 possible pairs that we could look at, but we cannot have the patience or the time or the fortitude to flip through 28 charts looking for a tradable pair. That's just ridiculous and a real waste of time, and there just has to be an easier and better way. Well, the easier and better way to find a tradable pair is to use a currency strength meter. And what it does is it shows you the value of 8 major currencies, and it's color coded and it has a numerical value system also. So I'm going to explain to you how to use it. And I just want to emphasize that using a currency strength meter has become so important to me that I cannot imagine even trading without it. And I've traded with this particular meter for many years now, and it's my favorite meter. I've tried lots of other currency strength meters on the market, and this is the one that I've settled on for several years now. So I thought that it was so important to me that I know it has to be important for all other traders. And it's not just about finding the major trend. It's more of finding the right currency pair that's going to give you the most movement and the most pips in the shortest amount of time, and do it as fail-safe as absolutely possible. And that's what a currency strength meter can do for you. It can save you so much time and frustration, and it can give you a win ratio of over 80% once you really learn how to use it. And it's not that hard to learn to use because it's color coded and it has a numerical value system that's very, very simple. So I'm introducing you to my favorite currency strength meter. I've created a template which has some of my favorite indicators that help you decide when to enter and when to exit, because we have to always take into consideration support and resistance and momentum. And of course I like Fibonacci, so I have Fibonacci extensions as targets. So all of this is on this very basic template. So now let's get back to how to interpret the meter itself, because it's actually very simple. It just takes a couple of hours of practice in a demo account and you're going to understand it and have it down. You're going to be thanking me because it's going to improve your trading so much that you're going to wonder how you ever traded without it. It's that important. So let's get on to the explanation. First of all, you can see the meter has several colors, and the New Zealand dollar currency here is blue and at a numerical value of 0.0. That is the weakest. Blue is the very weakest color, and 0 is the weakest value. The yellow is considered weak, and so these will be low numbers. The lowest is 0.0, and these are fairly low numbers. And then we have orange, which is strong, and then there's usually a red currency in the meter, but right now it's the end of the day on Friday. This is the very last candle of the day, and there's no red currency, so that means there's no currency that's super strong. But we do have several orange currencies which are considered strong, and we have several yellow currencies which are considered weak. So most of the time they're going to fluctuate between yellow and orange, weak and strong, and then during movements of extreme volatility, which usually comes from a political or an economic news event, then you'll see some blue or some red. Those are extreme values. So what the idea is that you're going to pair up a very weak currency with a very strong currency, or you're going to pair a medium weak with a medium strong. If you're going to pair a very weak like the New Zealand blue at 00, if you were to see on here a red at 7.0 all the way up to 8.0, which is the strongest value, that's a move that usually is already seeing the most momentum, and the values are in an extreme, so the price action has already moved and maybe possibly coming upon a time where the trend or the momentum has started to fall off or decline, so the move might be over. So it's better to find some trends which are in the medium range, which is between the yellow and the orange, and then you have possibility of catching the beginning of a trend and not just entering when the trend is already over. Right here we're looking at the New Zealand dollar, and the New Zealand dollar is very weak at blue 0.0, and it's paired with the US dollar. So the US dollar is orange and a value of 6.1, so that's considered strong. And so we've paired up a weak currency, which is the New Zealand dollar, with a strong currency, which is the US dollar. And what we do is we sell the weak currency and we buy the strong currency as a pair. So we're selling the New Zealand dollar. We're selling the New Zealand because it's very weak, and because it's a pair, it's paired up with the US dollar, we're buying the US dollar at the same time. So the New Zealand dollar, this pair is going down. You can see it right here, the last candle of the day on a Friday, and you can see that it's been on a downtrend. It's underneath this red channel resistance line. It's been on a downtrend for many hours. So that means the New Zealand dollar has been very weak for many hours in comparison with the US dollar. The US dollar being very strong for many hours. So that's what we do, is we pair up a weak currency with a strong currency, and we sell the weak and we buy the strong. So the trick is to easily and quickly, at a glance, find a weak currency and pair it up with a strong currency, and that's what the meter can do for you. So at a glance I can see the New Zealand dollar is the weakest, the CAD is the strongest, and so you're selling the weak currency and buying the strong currency. If you can just keep that rule in mind, then this currency meter becomes very easy to understand and interpret at a glance. So I know that in the beginning it might seem a little complicated, but it's actually very simple. So I just suggest that you practice with it in a demo account, and in the PDF I'll be giving you more training videos, and I hope they're simple enough that you can understand how to use this. And I just want to thank you so much for watching. Thanks again.